Well, dear students, good morning to you all. Good morning. Today our topic is valuation of goodwill. Valuation of goodwill. Goodwill is the name and fame, reputation earned with a firm, valued in terms of money. That is called goodwill. Goodwill is an intangible fixed asset. Goodwill is an intangible fixed asset. Well, dear students, assets are mainly two types, fixed assets and current assets. Fixed assets are those which are helpful for long-run benefits, like land and building, plant and machinery, etc. Current assets are those which are helpful for day-to-day purpose. Understanding? Cash, stock, debtors, bills receivable, etc. Now, the fixed assets are again two types, tangible and intangible. Tangible means what you can see, what you can touch. Tangible means what you can see, what you can touch. They are all called tangible fixed assets. Land and building, plant and machinery, furniture and fittings, premises, they are all tangible fixed assets. Our topic: goodwill, patents, trademarks, copyrights, they are all called intangible fixed assets. We can't see, we can't touch it. They are called intangible. Understanding? Goodwill is an intangible fixed asset. We can't see, but we have our own name. Understanding? Goodwill is an intangible fixed asset, but not a fictitious asset. You know, fictitious asset. Preliminary expenses, loss on issue of shares, discount on issue of shares and debentures, they are all called fictitious assets. They are temporary assets. They are not actually assets. They are shown on the asset side, but in future, year by year, we will write off some amount. After certain period, they will be closed. The fictitious assets cannot be realized into cash, but goodwill can be realized into cash. It can be sold for cash. That's why it is an intangible fixed asset, but not a fictitious asset. Understanding or not? Hello? It is the name and fame, reputation earned by the firm. Goodwill is an intangible fixed asset, but not a fictitious asset. It is the name and fame, reputation earned by the firm. Name and fame, reputation earned by the firm. I have my own name. You know, I'm Sai. Sai is not a name, it is a brand name. Surya Bhai. I earned that name through hard work, sincere work, dedicated work. I got such a name. Understanding? Just I am giving one example. 17 years back, my son asked me, Daddy, I want to have cinema CD. Okay, వెళ్దాంపా అన్నాను. నీ జేబులో డబ్బులు ఉన్నాయా అన్నాడు. ఎందుకురా అంటే 2 days బ్యాక్ ఓన్లీ చిరంజీవి మూవీ రిలీజ్ అయింది, కొంత అడ్వాన్స్ అడుగుతారు డాడీ, అడ్వాన్స్ ఇస్తే కానీ సీడీ ఇవ్వరు అంటే పర్లేదు అది పోదాం పదా అన్నా. వెళ్ళిన తర్వాత బాబు ఠాకూర్ సీడీ కావాలి అంటే ఇచ్చారు. ఏమైనా అమౌంట్ ఇవ్వాలా అన్నా. భలే వాళ్ళే సార్, యు నో మీ అన్న. మీరు సాయి సార్ మా బ్రదర్ మీ దగ్గర చదువుతున్నారు. సో ఐ హ్యావ్ ఏ నేమ్ ఇన్ ద మార్కెట్. ద నేమ్ వాట్ ఐ ఎర్న్డ్ త్రూ హార్డ్ వర్క్ అండ్ సిన్సియర్ వర్క్. అండర్స్టాండింగ్ ఆర్ నాట్? Dedicated work. In what way we dedicated means we don't know, we don't have a time to take food also. In such a way I worked a lot, I struggled a lot. Understanding? So that is the name what I have. That is called goodwill. Goodwill is the excess earning capacity. Goodwill is the excess earning capacity. more than the normal rate of return. On capital employed in the business. Well, dear students, you know capital employed is nothing but net total of tangible assets. We have our own assets, I told you already, we have fixed assets, we have current assets. Take them all, the total of assets, minus total of liabilities, outside liabilities. Don't take capital, reserves and profits, they are payable to owners only. They are not the outside liabilities. Creditors, bills payable, bank overdraft, outstanding expenses, they are all called current liabilities or outside liabilities. Loans also what we have taken from the near and dear or from banks, they are also outside liabilities. So total of assets minus outside liabilities, that is equal capital employed. Suppose our total capital employed is equal to 2 lakhs. That is called net tangible assets. What do you mean by net? Assets total is called gross total. After deducting outside liabilities, then only you got capital employed. After deduction only you can use the word net. GNP, NNP you know. GDP, NDP you know. Gross salary, net salary. After deduction only you will get the net value, net tangible assets. It is also called capital employed in the business. Suppose my capital employed is equal to 2 lakhs. Then normally in the market 10% rate is going on. That is called a normal rate, fair rate, reasonable rate, whatever it may be. 10% means I have to get only 20,000. But actually I am earning 30,000. I am getting excess profits. Understand? So, goodwill is the excess earning capacity more than the normal profits, more than the normal rate of return what we expected on the capital employed. Understanding or not? Well, dear students, once again, goodwill is an intangible fixed asset but not a fictitious asset, I told you. It is the name and fame, reputation earned by the firm, valued in terms of money. It is the excess earning capacity. It is the excess earning capacity more than the normal rate of return on capital employed. Next, the goodwill is valued on occasions like admission of a partner, retirement or death of a partner, amalgamation and absorption of firms, in these occasions the goodwill is valued. Goodwill is valued. Well, dear students, the goodwill is valued based on profits and the location of the business. The profits what we are earning in the previous years, the location what we have, which is a favorable location to us, and we have a close, healthy relations with the customers and suppliers. We have our own brand name, brand image in the market. Because of all these reasons, we earned that name that is goodwill. Understand? That must be valued on occasions like admission of a partner, retirement of a partner, death of a partner, sale of a firm, when two firms are amalgamated, when two firms are absorbed. In all these conditions or occasions, we have to value the goodwill. The goodwill may be the purchased goodwill, or sometimes it may be a self-generated value. It may be the purchased value. Purchased value means, suppose we purchased it from assets or as it is business we acquired from some others. Actually their net worth is only 10 lakhs, but we paid for it 12 lakhs. How much excess we paid? That is 2 lakhs. That is called goodwill we paid. That is the cost of goodwill what we paid. Understanding or not? So, these are all the important points to be remembered in the valuation of goodwill. Last and final once again. Understanding or not? It is the intangible asset, but not a fictitious asset. It is the name and fame, reputation and by the firm. It is the excess earning capacity more than the normal profits. More than the normal profits, we are earning more profits because we have name. On capital employed, 10% is the market rate. That means we have to earn only 20,000, but we are earning 30,000. That means we have our own name, that is goodwill. Understanding? The goodwill is valued on occasions like this, and goodwill may be the purchased value or it may be self-generated value. Understanding? Now, we can go through how to value the goodwill. What are the methods to value the goodwill? That we have to learn. Please take down whatever you want. Now I am going through how to value goodwill. Valuation of goodwill methods. Number 1, simple average profits method. Well, yes students, simple average means simple average profit is equal total of profits divided by number of years. Simple average profit is equal total of profits divided by number of years. Suppose there are 4 years last year's profits. In 1 year we got 4,000. In the second year we got 6,000. But in the third year we got 5,000 only. And the next year or fourth year we got 8,000. Now total of profits divided by number of years. There are 4 years now. 10, 15, 23,000 divided by 4. This is called simple average profit. Simple average profit is equal total of profits divided by number of years. Suppose you added 4 years divided by 4. Suppose you added 3 years only divided by 3. Understanding or not? It is the simple average. Even in statistics also like that only now. That is called arithmetic mean. AM. That is only called average. So, simple average profit is equal total of profits divided by number of years. That is equal. We got simple average 5,750. Now goodwill is equal simple average profit into number of years expected. Number of years expected. Or it is also called number of years purchased. Or sometimes it may be called number of times, 2 times, 3 times like that. Our simple average profit is equal to 5,750. Suppose the same level of profits we are expecting for the coming 3 years. You have to multiply with 3. Not this 4. That 4 is the total of years divided by number of years. Total of profits divided by number of years. But here it is, how many number of years we are expecting the same level of profits in the coming years. In the coming years. Understanding or not? Suppose if I am expecting 3 years. Why I am expecting 3 years? Right now, the intermediate students will continue for 3 years degree. Or first become student, they may continue for 2 more or 3 years. In such a way, I am expecting for the coming 3 years. మనం భవిష్యత్తులో ఫ్యూచర్లో ఇంకా ఎన్నాళ్ళు ఈ ప్రాఫిట్స్ ఎక్స్పెక్ట్ చేస్తామో ఆ నెంబర్తో మల్టిప్లై చేస్తున్నాం. వీఆర్ ఎక్స్పెక్టింగ్ ఫర్ ద కమింగ్ 3 years. సో $17 to $50. It is the value of goodwill. Once again, last and final. Simple average profit. Simple average means total of profits divided by number of years. You got 23,000 divided by 4, that is equal to simple average. That simple average profit is expected with the number of years expected. Into 3 we have taken, for example, now we got a goodwill 17,250. It is called value of goodwill. Understand? Well, yes, students. The simple average generally we have taken into consideration when the profits are in up and downs, when the profits are fluctuating. For example, here first year 4,000 to 6th year we increased, but again we decreased. That means up and downs are there, fluctuations are there. Then only we have to go through simple average profit. Understanding? Next, one more important point. Whenever we are taking the profits must be taken the real profits, not the book profits. Profits according to books may be different from real profits. Sometimes there may be unexpected income maybe in the last year. Unexpected income. That the income may not continue in the coming years. Then we have to deduct that unexpected income. Then only we will get the real profit. Understand? We have to take real profits but not the book profits. Now, second method, weighted average profits method. Weighted average. When we will take into consideration weighted average? I told you in the simple average, when the profits are in up and downs, when the profits are in fluctuations, better to take simple average. But right now, the profits are always increasing, gradually increasing. There is no question of decreasing. Understanding? Profits are always increasing. In the first year, we got 4,000. In the first year, we got 4,000. In the second year, we got 6,000. For example, in the third year we got 10,000. In the fourth year we got 15,000. The profits are always increasing. No question of decreasing. You don't know. So, profits are now multiplied with the number of weights. That is equal profit into weight. That is equal weighted profits. Weighted profits. First year is multiplied with 1, second year with 2, 3 and so on. What it is weighted? In the last year I got 15,000. In the coming year or next year I may expect either 15,000 or more than 15,000 or around 15,000 but not 4,000. Understanding? In the year, first year only we got it. At that time we don't know what is what. So in the first year we got 4,000, but every year the profits are increasing gradually. So in the next year we may expect this. So we are giving more weight to the last year and we are giving less weights to previous years. Understanding? So first year 4,000 into 1, 4,000. Second year 6,000 into 2, 12,000. Third year 10,000 into 3, 30,000. And then 15,000 into 4, that is equal to 60,000. The total is equal to 106,000. Is it correct or not? Correct only. 106,000. Divided by total weights, that is equal to 10. This is the total weights. Now weighted average profit is equal total weighted profits, sum of total weighted profits divided by sum of weights, total of weights. here weight, cancelled. Divided by means cancelled. So you will get the again profits. That is equal weighted average profits. How much weighted average profits? 1,06,000 divided by total weights 10. That is equal 10,600. Understanding or not? Hello. Here profits are in up and downs. That's why we have taken simple average. But here profits are continuously increasing. When there is a regular and continuous increase in the profits, you have to take weighted average. The last years are given more weight than the early years. Understand? So, we got the weighted profits, total weighted average profit 10,600. Now goodwill is equal weighted average profit into again number of years expected. $10,600 into we expected previously, same example I am taking, into 3. This is the goodwill. Understanding? Two methods we have completed. One is simple average and the second is weighted average. Profits up and down, so simple average chali. When the profits are continuously increasing, we have to take weighted average. Understanding or not? Please take down. We will go through another two methods. Well, dear students, we learned first method simple average profits, number 2 weighted average profits, number 3 super profits method. Super profits method. First we have to go through find out capital employed. Find out capital employed. Capital employed in the business, in our business. Total assets. When you are taking assets, don't take goodwill, preliminary expenses and investments. Investments, why it is not taken? It is also an asset. But we invested in the outside in the other company shares and debentures. Or we invested in the banks as a fixed deposits. They are all invested in outside, not in the business. Whatever the assets we are using in this business, that only we have to consider. That's why we have to take all the assets except goodwill. Because we are valuing goodwill, goodwill not taken. Understand? మనం వాల్యూ చేస్తున్నదే గుడ్విల్ కదయ్యా, గుడ్విల్ తీసుకోవద్దు. ఇన్వెస్ట్మెంట్స్ నాట్ టేకెన్ అండ్ ప్రిలిమినరీ ఎక్స్పెన్సెస్, లాస్ ఆన్ ఇష్యూ ఆఫ్ షేర్స్, డిస్కౌంట్ ఆన్ ఇష్యూ ఆఫ్ షేర్స్, దే ఆర్ ఆల్ ఫిక్టీస్ అసెట్స్. I already told they are not considered, they are not at all assets, temporary assets in the balance sheet. So they are also not taken. So total all the assets like land and building, plant and machinery, furniture and fittings, stock, debtors, cash and bank balances. All the assets total, for example, 3 lakhs. Now liabilities. In the liabilities, capital, reserves and profits are not taken because they are payable to owners. What we have to pay outsiders, like loans, creditors, bills payable, overdraft, outstanding expenses, they are all taken into consideration. They are all the total of outside liabilities. So total of assets minus total of liability, that is equal to capital employed. It is also called net assets worth, net tangible assets, whatever it may be. Now, find out normal profits. Find out normal profits. Capital employed into normal rate, what it is going on in the market, that is called normal rate. It is also called fair rate, reasonable rate. What we are expecting minimum. minimum 10% we are expecting. So normal profits is equal 20,000. 2 lakhs into 10%, that is equal 20,000. Hello, following or not? Capital employed is equal assets minus liability. Normal profits is equal capital employed into normal rate, that is equal normal profits. Now, super profits. Super profits means the actual or average profit, whatever is available, actual profit in the last year or average profits of last year, whatever available we will take. Suppose 30,000 minus normal profits $20,000. How much excess we are earning? That is called super profits. What is super? మనము వెళ్ళేటప్పుడు అనుకున్నాం ఇలా ఉంటుంది అలా ఉంటుంది అలా అనుకున్నాం, కానీ మనం అక్కడికి వెళ్ళిన తర్వాత చాలా బాగుంది. ఏంటి? మూవీ. అండర్స్టాండ్? It is super hit. We are saying that super hit. It is more than the expected. Suppose we expected 100 days picture, but it is 150 days or 200 days. అత్తారింటికి దారేది, మీకు దారేది, మీకు చదివే దారి. హలో, లిసన్, ఓకే, మీ దారి చదివేనయ్యా, ఓకేనా? ఆ మూవీ సూపర్ హిట్ అంటున్నాం. వై? బికాస్ మోర్ దాన్ ద ఎక్స్పెక్టెడ్. Here also, what we expected 10% only. Yeah. But we got 30,000 profit. Normal profit is only 20, what we expected. So, 10,000 is called super profits. Super means more than the expected, more than the normal. Now last step, goodwill is equal super profits into number of years expected. Okay, Babu. Super profits into number of years expected. 10,000. In the previously also I have taken 3 only. We are expecting more coming 3 years. That's why 10,000 into 3, that is called 30,000. This is called goodwill. Once again, first we have to go through capital employed. Capital employed in the business, in our business. How much capital we have? Total of assets minus total of liabilities. This is one way. 2 lakhs is the capital employed. In another way also you can find out capital employed. Total capital plus profits plus reserves. That total also called capital employed. Understanding? Profits means last year profit. Reserves means accumulated profits in the last several years. We kept a certain amount of profits for future, so we have to face the losses in future. They are called reserves. That is only called reserve fund or general reserve. In the companies, they must maintain certain reserves. But in ordinary firms also, they are maintaining reserves. So, capital, profits and reserves, the total is also called capital employed. That is liabilities approach. This is called assets approach. Assets minus liability, outside liability, that is called capital employed. Capital employed into normal rate, we got the normal profits. Understanding? Now, super is equal, what is super? Not super, super profits. Super profits, actual or average profit, whatever available, minus normal profits, that is equal to super profits. Now, super profits is equal to 10,000 into number of years expected 3, that is equal goodwill 30,000. Understanding? Now last model, almost all, last only. Profits capitalization method. Profits capitalization method. Profits capitalization is equal actual profit divided by normal rate. Actual profit here 30,000 divided by normal rate 10%, that is equal to 3 lakhs. Well, dear students, what is capitalization also I am explaining. Look here, 10% normal rate, what it means? For every 100 capital I want to earn 10 rupees profit. Understanding? 10%. Not 10%. 10%. Percent means for every 100. For every 100 capital, I want to earn minimum 10 rupees profit. If I am earning 10 rupees profit, my capital is 100. If I am earning 30,000 profit, how much capital must be? 3 lakhs. Clear? Based on the profit, we are expecting how much capital we have. How much we have capital? 3 lakhs. But actual capital employed how much? Actual capital employed here 2 lakhs is only there. Capital employed as per books 2 lakhs. The excess how much is there? That only called goodwill. That only called goodwill. Understand? Based on our profits, so how much capital we are expecting? How much capital must be there? Based on our 30,000 profit, our capital must be 3 lakhs. But actually we have only 2 lakhs. So the excess what we have, that only my name, that only called goodwill, 1 lakh. Or shortcut, goodwill is equal super profits divided by normal rate. Super profits divided by normal rate. Here how much super profit? 10,000. Super profit 10,000. Divided by normal rate 10%. That also 1 lakh. Goodwill is equal 1 lakh. Here 1 lakh we got under ordinary capitalization method. Profits capitalization method. Here super profits are capitalized. What it is called? Super profits are directly capitalized, that is equal to 1 lakh. This is 1 lakh, Babu. Hello. This is also 1 lakh. Both are same. But not same. Same. This is 1 lakh. Or another way, directly super profits by normal rate, that also 1 lakh. Both are same. Same to same. కాకపోతే అది సేమ్ చేసుకోదు, నేను సేమ్ చేసుకుంటాను. ఓకేనా? This is capitalization method. This is capitalization of super profits. Capitalization of super profits. Well, my dear students, in the partnership topic, one more goodwill is there. What it is called? Hidden goodwill. What it is called? Hidden goodwill. Hidden goodwill. A and B partners are there. Their capitals are 30,000 and 20,000. That is equal to 50,000 is the total capital of A and B. Total capital of A and B must be, is there 50,000. Total capital of A and B partners, that is equal to 50,000 is there. C joined for 1/5 share brought $25,000 as capital. Well, dear students, C is given 1 by 5 means A and B must be how much? 4 by 5. 1 minus 1 by 5, that is equal to 4 by 5. C is given 1 by 5. For 1 by 5, he brought 25,000 capital. How much? A and B capital must be for 4 by 5. So, 25,000 into 1 by 4 by 5 divided by 1 by 5, we can make it as 5 by 1. That is equal to 1 lakh. Well, dear students, C given 1 by 5. For 1 by 5, C brought 25,000. For 4 by 5, A and B capital must be 1 lakh. A and B capital must be 1 lakh. But actually there is only 50,000. The difference between this 50,000 and 1 lakh, that only called goodwill. Hidden goodwill, that is 50,000. Well, dear students, last and final. Hidden goodwill means it is implied goodwill. Based on the C's capital, how much the capitals to be there of A and B we calculated, that we got 1 lakh. Based on C capital, A capital and B capital must be 1 lakh because 4 by 5. That is equal to 1 lakh. But actually A and B capitals are only there 50,000. The excess how much is there, that only called goodwill. Hidden goodwill. Well, dear students, we explained all the methods. Please go through once again, all of you. Wherever doubts you can ask. Understanding or not? First method what we told, simple average profits method. Number 2, weighted average profits method. Number 3, super profits method. Number 4, capitalization of profits method. And the last and final, hidden goodwill. Well, dear students, thank you all for listening and see you all in the next class. Okay, once again, thank you all.